Hello traders, this is Jim Comiskey coming to you from ADM Investor Services. It is currently Monday, April the 2nd, coming up on 2 o'clock in the afternoon. Give you some comments on the metals complex amongst other things. First of all, the opinions that I am no doubt about to voice are mine and mine alone and are not necessarily shared by ADM's management, even though they probably should be. And who knows, probably are. Anyways, the gold is currently up $9.70 to $16.79. All right, $16.62 your low, $16.82.80 the high. Nice, impressive bounce today. Having said that, volume is very light, which always makes you suspect the move. Okay, like the stock market, volume is at like 10-year lows, and it's nothing but an up escalator. I sense the Fed's evil hand in all this, but we'll talk about that in a little while. The silver is currently up 60 cents to 33.08 May basis. 33.25 the high, 32.34 the low. Okay, run you through pivots quickly. All right, first of all, the gold. David Hightower is still on April. We rolled last week. All right, but anyways, I'm just going to do the math here quickly. First, excuse me, pivot today comes in at 1668. Okay, first resistance was already taken out at 1673. Therefore, it will become support. All right, second resistance comes in 1683 and a half. All right, support comes in at at pivot 1668. Below that, first support or second support rather comes in at 1662. Below that, 1657. Silver 32 is the pivot. Okay. We have, yeah, look at that. The low today is 32.34 May. All right, so pivot held. First resistance comes in 33.46, and above that 33.77. Support 32.01. Below that 31.87. All right. By the way, if you would like for me to shoot you out a report here, it's pretty good report. Okay, you can send me your email address. My email address is just jim.comiskey, COMISKEY, at archerfinancials.com. So shoot me your email address. I'll throw you in my address book, and basically you'll see a lot of what I send to my clients on an ongoing basis as the day goes on, trading days go on. All right, but rather than me spend the time giving you pivots, you guys could easily just get them all on your own, and I'd be happy to provide them. Okay, okay, to the rant. First of all, Fed's Fisher. Okay, he is the Dallas Fed Pres. All right, he did the same thing a couple years ago. All right, now Zero Hedge carried this. All right, basically, you know, you got Bernanke playing good cop. You've got Fisher, Plosser, and Lakota up in Minnesota, all playing bad cop. Okay, now they currently are all three voters. All right, actually, check that. They were voters last year. They've rotated off the table. Okay, so it really doesn't matter what Fisher says, to be honest with you. But again, for the markets, in the market's eyes, those three gentlemen definitely play the Hawks. Okay, by the way, the Fisher, Lakota, Evans, and Plosser all rotated off at the beginning of the year, and Pianalto, Lacker, Lockhart, and Williams rotated on. All right, so those four, in addition to the permanent six, Bernanke, Yellen, Tarullo, Duke, Raskin, and Dudley. There's your FOMC. Okay, so Fisher says the U.S. economy is improving. He says that late 2014 interest rate pledge will need to be adjusted. Fisher says that the Fed should sit, wait, and watch on policy. He says the time of survival of we are in times of survival of the fattest, not the fittest. Not sure what that means. And finally, Fisher says that the Fed has done enough easing. Couldn't agree more. Couldn't agree more. It was truly an Oscar-worthy performance out of Fisher, because he means nothing of what he's saying right here. He's just talking it up for the market. That was courtesy of Zero Hedge, by the way. All right, I meant to bring this up last week. It was Wednesday the 28th. It was basically there was an op-ed in the Wall Street Journal. Just going to read some of this. The title here is Wall Street Journal: Fed buying 61% of U.S. debt. A woman named Julie Crawshaw and Forrest Jones wrote this. All right, let's see. They are quoting a gentleman, former Treasury official and current president of the Center for Financial Stability, Lawrence Goodman. Last year, the Fed purchased a stunning 61%. You heard that right. 61% of the total net Treasury issuance, up from virtually zero prior to the 2008 financial crisis. Okay, Goodman also warns that the U.S. economy and markets are at risk for a sharp correction if conditions aren't normalized. He notes that foreign investors like Japan and China that once scooped up U.S. debt are now shunning it. In 2009, such foreign purchases of U.S. debt amounted to approximately 6% of their GDPs. Okay, it has since fallen by over 80% to 0.9%, China and Japan. Okay, in my humble opinion, that is where the beginning of the end starts. All right, basically what we'll see potentially, okay, is a sharp drop-off in demand, all right, for U.S. paper. All right, when the Fed loses its resolve and stops being a buyer of last resort here, it's inevitable. It's inevitable. Maybe it'll take a change of administrations. I don't know. I'm not smart enough. But when you see a spike in interest rates here in the States, that's when all bets are off for this stock market rally, et cetera, et cetera, et cetera. Keep stacking. Okay, that's when the metals really take off. Despite, the bad intent by some primary dealers out there. I won't name JP outright, but it seems to be fairly obvious. Okay. Rolling in this morning, too, we had a 9 o'clock figure. I'm going to read this because ISM is a pretty good number. It's a pretty good series. It's the Industrial or Institute of Supply Management. We used to call them NAPOM, National Association of Purchasing Managers. Anyways, this was the ISM Manufacturing Index came in at 53.4% on expectations of 53, up from 52.4 in February. Okay, the production and employment both rose. But new order declined from 54.9 to 54.5. Here's what makes this whole number suspect. Prices paid dropped from 61.5 to 61%. If you remember, the prices paid in the Chicago PMI last Friday soared. Okay, so who knows? Maybe they're cooking the books on a nationwide basis. Well, what else is new? All right, crude just popped dramatically here. It's up $2.30, 105.37, 105.49 the high. The U.S. just signaled that they were supporting arming the Syrian rebels. Okay, so it could go from bad to worse in Syria. Interesting article. I got to read this here. How much time? I'll get this time thing down, by the way, sometime soon. I promise. All right, this is from Seeking Alpha, a gentleman named Jeff Clark. All right, the title here is, Will India Stop Buying Gold? All right, so what Mr. Clark did here was he called a buddy of his who lives in India. Gentleman's name Ashish Sand. He owns the Savio Jewelry Studio and Jewelry Factory in Jaipur, India. Okay, now he sources with his shop here. He sources gold from bullion agents in Jaipur, who in turn obtain it from dealers in Hong Kong, Dubai, Mumbai, and Delhi. They have industry contacts the world over. All right, so Jeff Clark starts the interview with saying, "How would you describe demand for gold right now in India?" By the way, it is the Indian wedding season, okay, and the Indian subcontinent are by far the biggest consumers of gold. Okay, how would you describe demand for gold right now in India? We are seeing several shifts in the trends for gold demand. First, even with the increase in price, because if you remember, the export taxes were hiked in India. I've been basically giving you the stories that's been developing over the last couple months. All right, so it not only is it a revenue generator, okay, for the government, but they're attempting to like pop a bubble here. Okay, I'll continue. First, even with the increase in price, demand is still strong. People have not stopped buying. Part of this is cultural. Wearing gold jewelry in a wedding is a long-standing custom in India and will not change regardless of price. Okay, in fact, our shops are experiencing increased buying in spite of higher prices. Previously, we would have had only 1 or 2 customers per day for gold. Now we have 5 or 6. We are getting plenty of new customers and see new customers more frequently now. Second, I would say that awareness amongst customers has increased. Now they see jewelry also as an investment and they want a proper return on their investment, blah, blah, blah. Okay, Probably the biggest change we face, though, is that customers are more focused on getting lightweight jewelry, 14 karat gold instead of 18 karat gold. Interesting point made. Okay, this is also due to the high gold price. This adjustment, however, has not affected the desire to own gold. The bottom line is that the rise in the gold price has not hampered demand. Jeff, are Indians investing more in bullion, bars, and coins than usual? Indians are definitely investing more in bullion due to the rising trend in gold and silver prices. Investing in gold and silver has always been a good idea for wealth protection to Indians, and now we are seeing them buy more coins and bars than they used to. Okay, they're mainly purchased either in the wedding season or during the Diwali festival. I'll have to look up when that is, the Diwali festival. In fact, Google. But I'll come with it tomorrow if I remember. Another factor is that India has experienced many monsoons over the last 2 years, and farmers tend to invest their savings in gold and silver. Another interesting point. This is a major factor for the increase in demand for coins and bars. Okay? Okay, I'm kind of running out of time here with this it's priceless. All right, one of Obama's main men back here in Chicago, okay? Socialist, communist, whatever you want to call him, William Myers. Okay, I believe he is a teacher at the University of Chicago, and his rants work really well in the faculty lounge, just south of here. But I'm not sure how they work in the real world. But in a pep talk to Occupy Wall Street gaggle. I don't know if it was, by the way, with the weather changing here, the gaggle, great term for these guys. They're starting to gather again outside the front of the Board of Trade here, across from the Federal Reserve Building. But William Ayers, in a pep talk to the Occupy Wall Street gaggle, says he wakes up every morning thinking about how he's going to end capitalism, though he acknowledges he goes to bed every night disappointed. So remember, Obama, this gentleman held fundraisers when Obama was first running for president here in Chicago. And then Obama couldn't run away from him quick enough once his socialist ties were made public. Anyways, end capitalism. Okay, so William Myers, he's all for big government, as is Barack Obama. And I got some figures here that we'll talk about maybe later on today. I'll put up another post, or tomorrow, just how extreme the amount of funds that the U.S. is currently floating. Okay, it's beyond sick. It's a recipe for disaster, is what it is. Okay, I'll let you guys go. My phone number, if you'd like to call me, again, email me and I'll get you my address book and start shooting stuff. But my phone number, toll free, 888-935-7979. Or if you're calling from overseas, my number 312-242-7996. Or leave comments on the blog here. Good comment about the Canada dropping the penny. Will that impact the metals prices? Not really. It's such a low-grade metal that they have been using to begin with. Doesn't really affect the complex that we generally talk about here. Okay, but have yourself an absolutely wonderful day. Good luck, good trading, and please keep in touch or get in touch.